Hello everyone. Welcome to the Stock Minds web channel. Meta Platforms Nasdaq Meta wrapped up Q2 2025, delivering standout growth in both revenue and earnings, signaling the company's exceptional blend of high-growth momentum and attractive valuation. With Meta surpassing Wall Street expectations on both top-line and bottom-line metrics and providing bullish guidance, it presents an appealing proposition for growth-oriented investors. In this video, we will dive into Meta Platforms' recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Meta Platforms. Meta Platforms, formerly known as Facebook, was founded in 2004 by Mark Zuckerberg and his Harvard classmates. It operates core consumer platforms like Facebook, Instagram, WhatsApp, and Reality Labs, its metaverse arm. Its advertising-based business serves around 3.5 billion daily users across its family of apps, leveraged by investments in AI, infrastructure, and new user-engaging formats like Reels and messaging monetization. Meta financial performance. Meta Platforms delivered impressive financial results in Q2 2025, showcasing strong year-over-year growth across key performance metrics. The company reported quarterly revenue of $47.5 billion, marking a 21.61% increase compared to $39.07 billion in Q2 2024. Earnings per share (EPS) also rose sharply to $7.14, up 38.37% from $5.16 in the same quarter last year. On a trailing 12-month TTM basis, Meta's revenue reached $178.8 billion, reflecting a 19.38% increase from the $149.78 billion reported a year earlier. TTM EPS surged 41.34% to $27.57, up from $19.51 in Q2 2024, indicating robust profitability and efficient earnings growth. Free cash flow per share (TTM) showed a more modest increase of 2.38%, rising from $18.87 to $19.32, still signaling strong cash generation despite heavy investment in AI infrastructure and data centers. The company's profitability ratios remain exceptional, with a gross profit margin of 81.97%, net profit margin of 39.99%, and free cash flow margin of 28.04%. Return metrics are equally impressive. Return on assets stands at 18.47%, while return on equity reaches an outstanding 40.65%, underscoring the firm's ability to generate shareholder value. Additionally, Meta maintains a conservative debt-to-equity ratio of just 0.25, reflecting its strong balance sheet. Over the past 5 years, Meta's revenue has been growing at a 17.7% CAGR, net income at 22.1%, and free cash flow at 18.3%. Meta has consistently grown its business in the past and is still projected to grow rapidly in the future. Meta Fiscal 2025 Financial Forecast. Looking ahead, analysts project Meta's full-year 2025 revenue to reach $195.89 billion, a 19.08% increase over 2024's $164.5 billion. EPS is expected to climb to $27.72, marking a 16.17% increase from the prior year's $23.86. Analyst remains optimistic, giving strong buy rating with a consensus analyst price target of $836.03, offering a potential upside of 11.47% from current levels. The most bullish analysts see Meta reaching as high as $1,086, which would represent an impressive 44.79% potential upside. Meta stock price performance and valuation. At the time this video was created, the stock was trading at $750.01 per share. The stock has gained 50.6% over the past year, significantly outperforming the S&P 500, which rose only 14.5% during the same timeframe. Over the last 5 years, Meta shares have appreciated by an impressive 179.4%, again outpacing the S&P 500's 85.8% increase, showcasing Meta's sustained ability to deliver superior returns to investors. Additionally, Meta has started returning capital to shareholders, offering a modest dividend yield of 0.28%. While not a high-yield stock, the introduction of dividends alongside consistent buybacks adds an appealing element for investors. From a valuation standpoint, despite this strong run-up, the stock remains attractively positioned relative to its growth potential. Meta currently trades at a price-to-sales PS ratio of 10.92 TTM with a forward PS of 9.92. Its price-to-earnings PE ratio is 28.05 TTM with a forward PE of 27.57, which is reasonable considering the company's robust earnings growth and high profitability. Meanwhile, the price-to-free cash flow PFCF ratio stands at 37.48. Based on Fiscal.ai data, if we look at the valuation over the past 5 years, the forward PS, forward PE, and PFCF are all above the average. While Meta's valuation appears quite high, its business performance continues to grow rapidly, making the stock still reasonably valued. Meta growth potential. Meta growth prospect remains strong, driven by several factors. 1. AI-driven advertising revenue acceleration. Meta's AI integration has revolutionized its advertising business, driving $46.6 billion in Q2 2025 ad revenue, up 21% year-over-year. Key to this growth is AI-powered ad recommendation models, boosting conversions by about 5% on Instagram and 3% on Facebook. The Advantage Plus automated advertising suite saw its user base grow from 1 million to over 4 million advertisers within 6 months, reflecting rapid adoption. Meta's Andromeda Ads Retrieval System, powered by NVIDIA, has increased model complexity 10,000 times, dramatically improving the targeting process by narrowing ad candidates from millions to a few thousand highly relevant options. Additionally, generative AI tools for creative content are now used by nearly 2 million advertisers, enabling video generation and image animation. This AI ecosystem enhances both advertiser ROI and user experience by delivering more relevant ads, fueling sustained long-term revenue growth potential. 2. Massive AI infrastructure investment and competitive positioning. Meta's AI leadership is underscored by its unprecedented 2025 capital expenditure guidance of $66 to $72 billion, with similarly significant investment planned for 2026, focusing heavily on AI infrastructure. This funding supports multi-gigawatt data centers like the Hyperion project, designed to deliver up to 5 gigawatts of power, and the deployment of over 2 million GPUs by 2026, enabling large-scale training and deployment of advanced AI models. Meta's AI strategy emphasizes both proprietary innovations and open-source contributions through its Llama model series, which has inspired over 200,000 derivative models worldwide. Its $14.3 billion investment in Scale AI and the creation of superintelligence labs, staffed by top AI talent including ex-OpenAI researchers, highlight its focus on recruiting elite experts with compensation packages up to $100 million. This combination of massive infrastructure, top-tier talent, and innovative research uniquely positions Meta for breakthroughs in artificial general intelligence, driving competitive advantages and future revenue growth. 3. Global market expansion and monetization diversification. Meta's growth strategy focuses on emerging markets and diversified revenue beyond traditional advertising, unlocking substantial expansion potential. The company's international revenue is rising rapidly, particularly outside North America and Europe, driven by increased user adoption and engagement. WhatsApp Business Messaging has boosted click-to-message revenue by over 40% year-over-year, diversifying Meta's income. Additional streams include Meta-verified subscriptions and creator economy features on platforms like Threads. With 3.48 billion daily active users, Meta taps into fast-growing markets where digital ad spending is accelerating. AI-driven translation, tested in 10 languages, improves content localization and ad targeting for non-English speakers. Strategic partnerships with Global E enhance cross-border e-commerce, creating new advertising opportunities. Tailored market features an emphasis on video content, align with preferences in regions such as India and Southeast Asia. Strong monetization and ARPU gains across regions reflect effective localized strategies, positioning Meta to capture greater global ad market share. Risks to consider. While Meta looks like a strong investment case, we should be mindful of potential risks. 1. Societal and regulatory risks. Meta's recent changes to content moderation policy, including reduced fact-checking and looser rules on hate speech, are likely to increase the spread of false information on its platforms. This raises societal risks, such as polarization, erosion of public trust, and regulatory scrutiny, especially under tightening legislation like the EU Digital Services Act. Non-compliance can lead to significant fines, up to 6% of global revenue, and even temporary suspension of services in places like Europe. 2. Financial risks from advertising revenue dependence. Meta relies heavily on advertising for nearly all its revenue, 97 to 98%. Any decline in user engagement or advertiser trust due to increased harmful content or brand safety concerns could reduce advertising spending and impact financial performance. Advertisers may pull or reduce budgets if their ads appear alongside offensive or harmful content, as has happened with some brands on platforms like X, formerly Twitter. 3. Privacy and legal risks. Meta faced a $5 billion FTC fine in 2019 for privacy violations and continues to face lawsuits alleging it misrepresented product harms. Privacy breaches persist, leading to ongoing legal challenges. For example, Norway recently imposed daily fines on Meta, heightening regulatory pressures and increasing potential legal liabilities and costs. These issues highlight significant and continuing risks related to Meta's handling of user privacy and compliance with data protection laws. Conclusion. Meta Platforms stands out as a high-quality growth stock with strong financial performance, robust profitability, and a solid balance sheet. Its impressive revenue and earnings growth, combined with a dominant position in digital advertising and emerging AI capabilities, support continued long-term upside. Despite short-term risks, Meta's fundamentals, valuation, and future prospects remain highly attractive. For investors seeking a blend of growth and value in a tech leader, Meta's stock continues to be a compelling investment opportunity in 2025. But remember, this is not a financial advice. What do you think about Meta Platforms? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.